So dollar index, we have it's open on this down close candle. That's a bullish order block. That blue line right there, okay, that is the September 22nd, 2025 daily open. And it's this candlestick's opening price, okay? So the dollar index traded lower into this old buy side and balance sell side inefficiency that's shaded in blue. Hit that old order block level there. So right in here, as it hits that, there's most likely going to be some sensitivity off of that. So we'd have to then resume probably up into the high of the old buy side and balance sell side inefficiency. And also it's the first return inside that. So that's usually pretty significant. It's also on a daily chart. So we can get a little bit of a pop there intraday, sending euro and cable lower. All right, so here at midnight, we have a fair value gap here that initially acts as a breakaway gap. And then we have continuation lower, fair value gap there. Ignore the wicks. Down, SIBI trades up into that as well, breaks lower into this low. We rally away from that, come all the way back up to consequent encroachment of this daily premium wick and fair value gap. And guess what it goes into a inversion fair value gap there. This low does not take out that low. We come all the way back up to the inversion fair value gap. Small little errant wick there. It's normal. It's permissible. Notice the bodies are staying inside the inversion fair value gap. Okay. Notice it's not classic support and resistance of this old high. The bodies are being held inside of my PD array. This up close candle casted forward, and you'll see that it acts as an inversion fair value gap. Then it drops down, takes out the relative equal lows here and into that September 22nd daily open on that candlestick right there. All right, so here's Euro daily chart over here, old inefficiency, casting that forward. And we have this daily candlestick discount wick is being graded here. Okay, so see that 75 level, the quadrant, lower quadrant at 1.17596. That's this level up here. So we hit it once here in London. We dropped all the way down, traded into a bullish fair value gap first, running it up in there. Hit the low of that inefficiency over here. Sold off, hit the fair value gap up again. Consequent encroachment of the premium wick. Hits it, trades lower, consolidates in the initial bullish fair value gap, but now becomes an inversion fair value gap that I did not change the color because I want you to see this on your own chart. It breaks lower down into the inefficiency here, goes below it, comes right back in, treats it as an inversion fair value gap, trades down into an old bullish fair value gap, now becomes an inversion fair value gap right here. This one, the downside of it. Trades higher and then starts to reaccumulate at that old order block. So it's a bullish reclaimed fair value gap. Same thing here, back up into the low of this discount wick, which is 1.17503. That's this level here. Comes all the way back down to the bullish fair value gap. So it's a reclaimed bullish fair value gap once more. Rallies, consolidates inside the old fair value gap. So it's a reclaimed bullish fair value gap once more. Then they send it once more higher and relative equal highs here, but trading into that lower quadrant of that discount wick there. British pound, it's just a mess, just an utter mess. And we're stuck in between two wicks. Okay, so we have an old wick. You'll look at the older. If you have it on your chart you've been watching, you know what these levels are anchored to. And this one up here. So we've basically been trapped between that. And the only thing that was noteworthy is the inversion fair value gap here after taking sell side, relative equal lows, relative equal highs. So that liquidity was taken first, came up, left these buy stops there. You see that? Dove one more time lower. So that means this right here is absolutely going to be a murder, a PD ray. So it's casted forward. It's an inversion fair value gap and hits it once more and then comes right back up into the upper quadrant of this one right here at 1.34621. And that's there. Transitioning to futures. So we're focusing on index futures now. And you can see we're part of a longer uptrend. That's why I left it like this. I didn't want to zoom in too much. I want to remind you that we're part of a primary bullish market. So don't think top. We have a discount array in here in form of this wick and this consequent encroachment of this premium wick right there. And then we have the lower quadrant of this premium wick. So that's where your your levels are going to come from. It's shown over here, the horizontal line. This line here is this consequent encroachment of that premium wick. We have fair value gap. It dropped lower, went into that old consequent encroachment of that premium wick on this daily candle. Traded through it, accumulated around it, bullish fair value gap here, rallies, and then we have the first introduction to my ICT suspension block. You'll see it with this wick laying over top of it, so you would never look at that as a fair value gap, not by the definitions of it initially given. This is a bullish fair value gap, but this is not a bullish fair value gap in its classic sense. And if you look real close, there is a volume imbalance at the top and a volume imbalance at the bottom, even though this wick goes higher. Whenever you have one single candle that has a volume imbalance to the low and a volume imbalance to the high, that is going to act just like a fair value gap. And it does not matter if there's wicks that had already crossed over that to the left of it. Simply don't even worry about it. It's being suspended between two volume imbalances. That's why I named it suspension block. This is extremely strong, but the suspension block is extremely bullish or bearish if it's reversed and it's a down close candle. And you have narrative and order flow moving us lower, reaching for liquidity. Here we can see that it's going to be reaching up into 24,819 and a quarter. Now you can look at that on the 1 minute chart, scrub to the left. You'll see it's part of a volume imbalance. It's just the higher level of it. The whole point was that level, to me, was a volume imbalance. And 24,819.25 volume imbalance. And the lower level is just below, by not by much, it's very small. I trade up into this suspension block too. Now, I only changed the colors here just to show that they're both suspension blocks, but this one's the larger one, and we're going to push this one forward in time. The creation of this is, again, a volume imbalance at the top, a volume imbalance at the bottom, and it does not matter if there's a wick to the left. So if it looks like it's been redelivered or it's back and forth in the same area, it's still inefficient. And it's being highlighted algorithmically because there's a volume imbalance to the lower and the higher end of it. Okay, it's very, very easy to spot. If you start scouring through your charts, you're going to see these things. They never have been noticed by you before. The bottom line is, here we go. We have the bullish suspension block, and it trades down to it here, and then consequent encroachment over here, and then one more time it dives down into it here, consequent encroachment, upper quadrant of it, just almost to consequent encroachment, but notice the body respecting it here. It trades to the 24,819 and a quarter. This is the run you watch me do. The trade was recorded and I shared it on X. So the market breaks down, comes back up one more time into another suspension block. See this? Lower volume imbalance, upper volume imbalance. But because we had a reversal, when we come back down in, it's going to act as what? Just like an inversion fair value gap. It changes its characteristic. So it trades up into consequent encroachment, breaks lower fair value gap, digs past the first suspension block, and then down into the second one. See that? And it rallies up, supports at the low of this suspension block there. So there's discount sensitivity, rallies up, discount sensitivity at the high of it, rallies, volume imbalance, trades one more time up into the suspension block here. And because it's changed its character to that of being a premium array, the body's respecting it here, and it rallies up. Look at the body stopping right there. That's technical science. But it breaks lower, comes back up, consequent encroachment, trades down to the volume imbalance, and then sends it higher back. These are just the upper and lower quadrants, respectively, into this suspension block. All right, so moving forward, that's suspension block, and the lower green one, I have that here so you can see it in reference. Price rallies away from that. Inversion fair value gap was a SIBI. Now it's a bullish inversion fair value gap. Consequent encroachment sends it higher. Finds support at the upper quadrant of the suspension block over here. Rallies up, consolidates around the volume imbalance that I told you to look for in the 1 minute chart to the left. Rallies up, peters out, comes down, and then fizzles out, and then it creates the relative equal highs I mentioned at the opening. That was the level I was looking for. That was the first level I talked about. So the market breaks down, and then we go into this really ugly back and forth over top the first presented fair value gap, which I'll annotate in a minute, but just really back and forth, had no support or affinity for the first presented fair value gap. It just kept sweeping back and forth, and that's manipulation. They go up into the upper quadrant here of the suspension block, dive down into the bullish fair value gap in here. We're using the lower volume imbalance, and the candlestick's low here. Hits it beautifully with the bodies, and then it shows the rally away from that, and then we're going to move forward in time again. Here's first presented fair value gap. You can see all the movement back and forth. And it wasn't until we got around in here where price left the lower half here. We've done a lot of damage down here on the downside. And aiming for this area here, we finally ripped for it, breakaway gap, trades through it here, and then I mentioned that 24,857 buy side remained. So they came up and hit that. Body stopped right there beautifully and sells off once more back into first presented fair value gap. Just again, no real respect of it at all, just complete manipulation. When the first presented fair value gap does not have any kind of sway over the marketplace, and you don't see it being respected at all, no support, no resistance to it, no consolidations inside of it, which is the bodies, it's indicating that we're in troubled waters. So you have to just be careful. And I mentioned because the dollar index, gold, and NASDAQ all fell overnight. That's not usually what you see. So it's a decoupling in the marketplace. So that makes it more likely that we're going to have high resistance liquidity run conditions, which is exactly what we had here today. The rally off of the consequent correction over here, hit that. And then we start to have a little bit of respect over here, rallies back up, goes into a fair value gap that's bearish here, and then sells off, trades back down towards the halfway point of that level there. We dip down to 24,722 and a quarter. We have that's an inversion fair value gap. Hits it here, fair value gap there as well. Rallies, a little fair value gap at the consequent correction of the old premium wick right there. And then it rallies up. Again, no coming back down in and touching the first the fair value gap. It just kept on rallying. And then we had the old volume imbalance, 24,819.25 level, come in again once more, and then rallies back up. And we'll see if it takes out the 24,863 level and make a higher high on the day. All in all, it was very, very manipulated today. And I gave you the commentary before the market opened that it would be like this today. It would be problematic. I gave two liquidity pools. I said, look for things that are smooth. And obviously the buy side liquidity was mentioned at the 913 and 930 1 minute highs, as I mentioned just a moment ago. And that's right here. And then I gave the 24,701, I think it was a quart and 0.25. Those lows down here, I liked. And if the news at 10 o'clock would have sent us lower, because we were not seeing a whole lot of rhyme or reason in what was going on here, 10 o'clock news, you want to sit and wait. And it just wasn't giving up anything that was useful. So, there it is. But the first mention of any liquidity was this one here I gave you today. And then as it hit it, I said we would go to 24,857, hit that, and then gave up the ghost rather aggressively. But just all in all, this if you got hurt today, if you had difficulty, it's not a knock against you, because this was a very hard read. It was a very difficult read. Not impossible to trade, obviously, but very, very difficult to read, and not high probability, not clean price action, not obvious PD arrays and obvious draw on liquidity and straight runs. This is high resistance liquidity run conditions where it's going to frustrate you. It's going to frustrate you. So one of the advantages of learning under me is identifying the characteristics that lead up to these events, because the best skill set you can have as a trader is knowing when not to risk money.